Mahindra and Mahindra results and the commentary has received a thumbs up from the analyst community, and presumably that's the reason, and of course buying is the reason why Mahindra and Mahindra shares have hit record highs today. We get in Dr. Anish Shah to talk about what went behind the commentary that came in from their end, and what is his view, more importantly, on what the next 12 to 24 months hold in store, in light of the fact that we've received mixed commentary from multiple other corporates about what growth could be like over the next 12 months. Dr. Shah, good having you. Thanks for taking the time out. I would like to divide this chat, one into M&M and two into how do you see the world from your landscape. Though I know we spoke about it just recently in January, but from there until now, some other comments have come in from some other promoters as well. Can I think of what you've done and what you will do at M&M over the next 12 months in the auto segment as a tale of two ends, if you will? That tractors may not necessarily do that well, but the SUV segment, or the cars or the passenger vehicle segment, is really striking the right chords.
So Niraj, it's a pleasure to be here with you, and I would actually expand what you said, because for us it's really a tale of multiple businesses doing extremely well altogether. Even our farm business has done very well. Yes, the farm industry is flat right now versus the prior year. We expect it to go down a little further, so it will close the year at -5%. But we've gained 80 basis points of market share, and when a market share is above 40%, it's not easy to gain 80 basis points, and that's allowed us to keep profitability high. Margins have continued to be high, and overall the farm business contributes very well to our profitability. Auto has clearly seen a lot of progress over the last few years, coming out of the products that we've delivered, which truly are world-class products and have been beating the competition hands down. So that's been a big plus for us. But beyond that, as we look at a number of other businesses, Mahindra Finance is very well back on track. We look at our growth gems, they are delivering at a very high level. Our solar business has introduced or listed India's largest renewables InvIT, and is set up for significant growth. We'd planned for a 5x growth in the next 5 years. We're now evaluating whether we can grow 10x in the next 5 years, or somewhere between 5 and 10. And multiple other growth gems also are firing on all cylinders. So today for us, it's really about pure execution. It's creating plans that were realistic, at the same time aggressive, and then executing on those plans.
Interesting you say that. I mean, execution would be the primary driver when demand will not be a concern. I hear some of the other CEOs / promoters come in recent past. Baba Kalyani and Amit Kalyani spoke on air. Some others have said that too. Though I must agree there's been mixed commentary around what the state of demand could be in India and the world when Europe and China are looking cagey. Now, you've spoken about this in the past, but I'd love to, for you to share some light if you are concerned about that, and would you believe that M&M and different businesses could still perform even if the growth numbers don't look that great in those areas of the world?
So first, we feel India is very well positioned, and we can talk in more detail on the questions you have specifically on India, but the rest of the world also is looking better than it did a year ago. Yes, it is going through some stress. We do expect some more concerns. Inflation's not completely gone away as yet. Geopolitical issues are still alive and kicking, and do end up bothering us from time to time, as we've seen more recently from the Red Sea attacks. So all of those uncertainties are out there. But we've learned to live with those uncertainties. We've learned to, in some ways, find solutions to them and thrive in them. After having gone through COVID, the level of confidence on that is much higher. So that, combined with the power we see in India today, in the Indian economy, I think positions us really well.
Okay, so sorry, I'm hearing you say that you don't seem to be perturbed by growth pangs that some other people might be perturbed with, because I heard you say that the world is actually a better place than what it was 12 months ago, at least from your perspective and your business.
That's correct, Niraj. We are not perturbed by it. We will live with those uncertainties, work through them. As I said, the India market is strong, and beyond the India market, the products that we have and the businesses that we have are very well positioned, and that's really what's driving the growth for us.
A couple of questions on the auto piece. Now, the volume Q3 volumes on the auto side were very, very strong. I believe you've said that Q4 SUV volumes are likely to be flattish though, and at the same point of time, I also see that you mentioned that in case of certain models like XUV 700, for example, order bookings had gone down because of, one, the waiting period, two, people got confused that XUV is not across the price range but only at the upper end. So help us understand, is it a demand-led piece which is making flat volumes, or is it firmly on the supply side and the perception which may change very swiftly in quarter 4 or maybe quarter 1 of FY25?
So we have more than doubled our capacity. We were at 22,000 not so long ago, 25 then, and then we had laid out a path to get to 29,000 2 years ago, 39,000 last year, and 49,000 by the end of this fiscal year. We're at 44,000 today, and the increase in capacity is really what has helped us bring down the wait times and bring down the order book. At the same time, the order book today is 225,000. And as we told the analysts as well, we would like to see it lower, not at that higher level, because a high order book means long wait times for our consumers. And we are seeing very good demand, we are seeing very good growth numbers, and the challenge for us is how can we continue to ramp up capacity to bring that order book down further. So the order book has come down largely because of our capacity increases, and as we go forward, we would want to continue bringing that down.
Okay, and 2025 presumably, or 2024, excuse me, presumably will be an exciting year, or the next 18 months could be exciting, because I believe there are some new launches happening, some unthought of models a few years ago maybe hitting the Indian landscape from your end as well. So talk to us about two things, Dr. Shah. One, how exciting would be these launches, and what could it mean for volumes, part one. And two, you've chosen an interesting path of being on EVs versus hybrid. Some other companies are doing completely the opposite, if you will, in a predominant way. Tell us your thoughts on the increasing competition in the EV landscape, particularly this whole conversation around global companies, Tesla, what have you, might also making a foray into the Indian markets.
So you got lots of questions there, Niraj. So let me take them one after the other.
Yeah.
First, on our excitement, we've got the 5-door. Go ahead.
No, I'm saying so sorry for too many questions, but please humor me.
No, that's fine. First, on the excitement for this year, we have the 5-door Thar, and more importantly, beyond that, we have a born electric SUVs being launched. These are going to be 6 SUVs that are coming up. We had 5 initially, we've added 1 more, and they will start launching this year over the next 12 to 18 months. And these are a fantastic set of cars. These, I would say, are going to compete with the best in the world, and our hope is that they will move ahead of the best in the world as well. I've test driven 3 of them. They've come out really well, and we're looking forward to that launch. So that's going to be a big deal for us. The second question that you had was on hybrid versus EV. Now, hybrid is something that's really an extension of ICE. The emissions are the same, fuel efficiency is slightly better, the cost is higher than ICE. We had a choice to make whether to do hybrid and EV or whether to go for EV only, and we chose EV. We can always go back to hybrid if consumers want that. That's not going to be difficult to do. But EV is the technology for the future, because that is a dramatic change. The vehicles are far better. The emissions are non-existent. You've got a much lower operating cost. There will be certain hiccups as the EV ecosystem develops, because you need to have a charging ecosystem that makes it as easy to create a charge as it is to fill petrol or diesel today. And that will take some time, and which is why governments around the world are incentivizing EV, because they see the benefits of it at the end. You have countries like Norway, which are 90% plus EV right now, and they've gone through all of those challenges. And many other countries are going through them at this point in time. So for us, we feel that very strong EV portfolio is the path for the future. At the same time, we are focusing on a strong ICE portfolio. And if the consumer wants hybrid, we will bring that in. But as I said, hybrid is really an extension of ICE. And then to get to your third question on what we are hearing around imports, etc. We've said this before. We have a very clear message on this, that if you believe in India, then make in India, invest in India. It is actually very unfair for consumers if you import from outside without a commitment to the market, because a consumer doesn't know, are you going to exit tomorrow? And when a consumer buys a vehicle, they want that vehicle for the long term. They want the manufacturer to be there for the long term to support them in the choice of that vehicle. India is in a very strong position right now, and will continue to get even stronger. And therefore, the Make in India initiative that the government has launched is something that we support wholeheartedly. And we feel that companies that can make in India, do research in India, develop products for the world, will make India only stronger, and which is what we would completely encourage. At Mahindra, we have benefited from competition. The products we make today are far better than the products we made 10 or 15 or 20 years ago. And that's because we've evolved with competition here. So we welcome competition, and we are happy to compete with them. As I said, we are creating world-class products here. So therefore, our message is, if you believe in India, then make in India.
I have three more questions, Dr. Shah. One is on tractors, one is on margins, and one is then on the overall other businesses before we wrap up. Firstly, on tractors. Now, I heard you say that there is farm equipment has seen some bit of or significant market share gain on that base per se. But in some sense, most notes that I've read this morning, and just looking at the kind of numbers that have come out, there seems to be a bit of a cyclical downturn. Possible to predict when is it that this might see flattening out or an uptick which might aid your volumes as well? I'm sure you're happy with market share gains, but I'm sure you will be happier with better volumes.
Clearly, yes. And it is, as you said, a cyclical downturn. We have always seen this in the farm industry over the years. At this time, we've been flat last year, will be negative 5% this year. It seems slightly better than the downturns we've seen in the past. And usually they come back reasonably quickly. So something that no one's been able to predict as to how long that will last, but we are fairly optimistic. And while there has been a lot of talk about rural distress, we feel that an industry here that has grown 27% in 1 year, 3 years ago, and is somewhat flattish right now, is really not in that bad a shape overall. Our farm machinery business grew 30% year over year in the same industry. And again, yes, that was driven by market share gains as the industry was lower. So for us, it's par for the course. We will have certain years where we are flattish, and it's core execution again that will drive our performance through that time period.
Okay. The belief that a couple of analysts have expressed post the call yesterday is that over the course of the next 24 to 36 months, your revenue growth, let's say early teens, but your EBITDA growth could be stronger. Now, my question is, if indeed the rural market and thereby the tractor market, both globally and locally, does not show a swift pullback, do you reckon that you will still be in a position to be able to expand margins? Because I believe Q3 margins are partly flat also because, or impacted partly because the tractor business isn't quite firing on all cylinders, even if you're gaining market share, but not quite firing on all cylinders.
So on this, Niraj, we actually had a chart in the analyst meet yesterday where we showed that despite the volatility in the overall industry over the years, we've been able to keep tractor margins fairly stable. And therefore, even with some of the challenges that may come by beyond what we see today, we feel fairly good that we can maintain a level of stability around tractor margins. We did see them dip about 60 basis points or 70 basis points in this quarter because of a one-time impact that we had from specific expenses we did. But beyond that, we feel fairly good about maintaining tractor margins. Yes, it will fluctuate in a very small range, but it's been reasonably stable over time.
And overall consol margins for M&M, you reckon that there could be an upward trend, a better than revenue growth number on EBITDA and stable margins possible?
So we have seen a significant increase in auto margins. We had promised 300 basis points about a year and a half ago. We achieved that and then achieved an additional 170 basis points on top of that. As we look at the strength in auto, again, we feel good about where we are right now. And as I said, for us, overall performance is driven by execution, not just in these two businesses, but other businesses. So it's important for us to, as I tell all our folks, keep our head down, do what we're doing, and the results will show for itself.
Okay. Sorry, if you have time, I just have one last question, Dr. Shah. Should you have the time?
Yes, Niraj, go ahead.
Okay, just one last question. In all our interactions thus far, there have been 3 of them. You've spoken at length about how the newer businesses, the businesses of tomorrow, if you will, whatever the nomenclature is, and how you're betting on them. Now, you have some erstwhile legacy businesses. By legacy, I don't mean in a bad way, but ones which are doing well, but large businesses. And you've been talking a lot about the businesses of the future. Do you reckon that an M&M consolidated book 5 years out will look materially different in that the quantum of contribution from the smaller businesses, hitherto smaller businesses, as a percentage overall would be much higher than what it is right now?
It will absolutely look materially different because we have 10 growth gems, and we started with the first challenge for them is to hit $1 billion of market cap each. And many of them came close to it. While we told them you have 3 to 5 years, within 2 years, many of them were at 600 to 900 million. And we've now increased that bar to say you got to grow 5x from where we are today in the next 5 to 7 years. So as we see significant or exponential growth in these businesses, they will start contributing in a much bigger way. And in fact, they're doing so already. So as we see our results today, it's not just because of our large businesses. In fact, one of our large businesses, Tech Mahindra, has had some challenges and is on the turnaround path now. Another large business, Mahindra Finance, had some challenges. We put them on a turnaround path a year and a half ago, and they're doing exceedingly well, as has been shown by the results that they've submitted. So we want all our business to really contribute to driving the Mahindra Group forward.
Okay. Well, we'll maybe talk about specific numbers the next time that we talk at the end of the year on this aspect particularly. But Dr. Shah, lovely talking to you. Thanks for taking the time out. Congratulations on, well, what your commentary's done for the business today or the stock today. But thanks for taking the time out and speaking to us.
Thank you, Niraj. Always a pleasure to be here with you.
Likewise, sir. And viewers, thanks for tuning in.